Hey everybody, Doug Collins here, Home-Based Money Secrets. Today, I wanted to get a little off home business topic and more on to something that we see a lot in the news, especially here in Canada. They're talking about raising the minimum wage. And I want to put a little bit of a different twist on things about what the government should probably do, which they won't. Let me kind of go to my whiteboard and explain it here. So let's say as an example, let's say minimum wage is $12 an hour, okay? And what we're saying here is, $12 an hour. So what they're saying is, in order for people to make a living wage, they need to make $15 an hour, okay? Per hour, okay? So what we want to do is we want to add $3 per hour, and that will bring people to, let's call it middle class minimum, livable wage, okay? So the government's all for that because let's say at a 22% tax bracket, the government collects 22% here or 22% here. Which number do you think they want? They want it on this number. However, what happens is, from a business owner standpoint, their cost just went up $3 an hour. So if they have a team of people making $12 to $15, they have to pay $3 more per hour. Plus, there's CPP contributions, EI. So the employer actually fronts more than the $3. Okay. So as a business owner, they're left to say, how do I absorb this number? Where do I get it? Normally is prices go up. They have to raise the prices to absorb this increase. Okay. So what happens is we as consumers, whatever business these guys are in, is we see it going up. Tim Hortons, we're seeing our coffee prices going up. We're seeing all these inflationary prices going up because of this. Here's one idea that the government should consider, which they won't because they don't collect as much tax. Okay, so let's say in this case, $12 an hour. Okay, so instead of saying let's raise it $3, we do is we look at our income taxes. Okay, so I'm going to stick with Canada. So in Canada we have I don't forget what their number is here. Let's say it's $17,000. We call it a personal amount. Okay, so our first $17,000 in income is we're not taxed on it. Okay, so you get paid every month, and they withdraw taxes. You get paid every month, so you do that 12 times, and the employer takes off your taxes. Okay, so that's the total taxes you pay at the end of the year. Here in Canada, you get what they call a T4. Okay, and then you file your income tax. So based on your gross pay, okay, there's a calculator that says you owe X amount in taxes. So that amount is matched with this amount, and you either get a refund, you break even, or you owe money because the employer didn't withdraw enough, okay? And that's factoring in this basic personal amount, okay? So what the government should do is increase that personal amount, okay? So what happens is they're actually saying you owe less taxes, okay? So what happens is they're putting more money back in your pocket, okay, at the end of the year, because let's say they put it up to $25,000. Okay, so your first $25,000 in income, if you were making $12 an hour, a good portion of your income will be tax-free. So even though the employer is withdrawing all this tax at the end of the year, it's going to be like a bonus. You're going to be winning the lottery from Revenue Canada or the IRS. They're going to give you a nice refund back because the money that's being withdrawn here is more than the money that the government's going to calculate at the end of the year on your income tax and what you owe. Okay, so that totally puts more money back into the average person without inflating the price, without raising the wage, which inflates the market prices. So the rest of us aren't affected by this. By putting more money back into the pockets of the people through this tax wage, people will spend more money. They spend more money, they get more taxes, they drive the economy. See how it works? But what happens is right up front, the government doesn't get as much taxes. So what we're doing in this home-based business money secrets course is taking this number and reducing it, okay, by having a home-based business. So you're able to bring in what we call tax deductions, okay, on things you're already spending now. Rent, mortgage interest, cell phone, computer, internet, You drive a vehicle. You have all these costs, power bills, utility bills. You have all these costs now as an employee just to live. You might as well switch that over, create a part-time home-based business, and start to get some tax relief from that. Okay, so those tax deductions. So if you take a look at the tax calculator that you can download in the link below, you can actually calculate based on all these figures. You can put in your own personal numbers, and at the end, it'll tell you what your tax deductions are. So the idea here is the government is not going to inflate the personal amount. Okay, what they're going to do is let the employers figure out how they're going to run their business by increasing the hourly rate. What we're doing here in the Home-Based Money Secrets is teaching you the inside secret. The little hack that a lot of people don't know about is to take your everyday expenses right now and make them tax deductible. Get yourself a refund. When I first started doing this, I got a $6,600 refund. I'm taking people through this course right now. They're measuring $1,000, $2,000, $3,000, $5,000 in estimated tax savings this year by all they're doing is starting a home-based business or tightening up their business, and they're getting real cash back from the government. So I challenge you. Do you want to give it to the government this year, or do you want your money back? Grab the course, get inside the course. The course in itself is a tax deduction. So get yourself inside the course and learn all these secrets. And don't leave it for the government because they want your tax dollars. Hope you guys have enjoyed this one, a little longer than most, but hopefully this makes sense, and we'll see you in the next episode. Take care. Bye-bye.